Welcome in this video. Will ZBCN coin come ATH again? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most important technical structures on the chart is a clearly defined bullish order block located just below the current price level. Such structures are considered by professional traders as areas with high potential for price reversals. Bullish order blocks are typically regions where large investors, institutions, or smart money have previously entered the market with strong buy orders and pushed the price upward. In this context, when the current price structure is examined, this strong support area below forms an ideal ground for a potential price reversal. The area where this bullish order block is located gains significance not only based on past price movements, but also in consideration of volume structure and candlestick formations. These blocks are generally areas where liquidity is accumulated, and when the price revisits these zones, buyers are expected to re-enter the market. So, this is not merely a simple support. It is a fundamental structure that can drive the market upward. This indicates that once the price reaches this level, it may initiate a much healthier and more reliable rally. Another key feature of bullish order blocks is that the price often reacts strongly and abruptly upon reaching these areas. This reflects the prevailing buyer pressure in the market. In the current situation, as the price is pulling back in a controlled manner from above, this strong bullish region below becomes highly significant as a potential rebound zone. In the past, sharp buying emerged from this area, leading to a market rally. If a similar setup forms now, there is a high likelihood that the price will once again move upward with strength. Additionally, in technical analysis, the interaction between price and these bullish blocks can be tested multiple times, not just once. In this regard, if the price revisits this area and consolidates for a while before making an upward move, it would technically lay the foundation for a healthy and strong rally. So this area does not only serve as a temporary support, but also as a solid base from which the price can gather strength and bounce. Especially during trend reversals or at the end of corrective waves, testing and breaking upward from such blocks can open a significant opportunity window for investors. This bullish order block on the chart also gains meaning when analyzed on higher time frames. For example, in 4-hour or daily charts, the area where this block is located has shown strong upward reactions with high volume candles in previous price movements. This demonstrates that the level is notable not only for the short term, but also for medium and long-term participants. Particularly for swing traders, taking positions from such levels can be both technically secure and potentially rewarding. Moreover, when examining the volume profile, it is clearly evident that significant volumes have previously occurred in the area of this bullish order block, with large players actively trading there. Such volume confirmations are among the factors that validate the strength of a level in technical analysis. In other words, it's not only important that the price has previously reversed from there, but that the reversal happened with volume support, making the area even more valuable. If a similar scenario unfolds now, it is expected that strong buyers will once again push the price upward. The absence of significant support below the bullish order block further emphasizes how critical this area is. Because if the price fails to find strong support here, there is a risk of moving to lower levels. However, the current technical structure and indicators support that this area is a strong support zone, and the price may react upward from this level. But of course, we can't base our analysis solely on the order block. Let's take a look at other metrics as well. Stay tuned. The price movement observed on the chart represents a very familiar and promising cycle from a technical analysis standpoint. We can clearly see that the price previously gained strong upward momentum and naturally experienced a healthy pullback afterward. These types of movements are part of the normal and healthy structure of markets. No asset moves continuously and uninterruptedly in one direction. Every major move inevitably requires a period of rebalancing. At this point, the correction that followed the previous upward rally closely resembles the current price behavior. Looking at the recent price action, it is possible to say that we are in a similar cycle again. In other words, the price has recently made another meaningful upward move and has since entered a phase of slight decline. However, this correction should not be interpreted as negative. On the contrary, such pullbacks offer healthy opportunities for new buyers to enter the market. In a rising market, a brief period of consolidation is crucial for easing overbought pressure and forming new support zones. In technical analysis, such pullbacks are often defined as profit-taking corrections, and they are typically followed by even stronger upward momentum. When an asset experiences a strong upward rally, some investors may wish to realize their profits. This causes the price to pull back slightly. However, these pullbacks are often limited in scope, and the price tends to resume its previous uptrend, heading toward new highs. The current correction, when compared to similar structures in the past, can be read as a constructive and positive signal. Another important technical detail is that this correction has not entered the previous rally zone. In other words, the price has stabilized well above prior low levels and is finding buyers here. This tells us that the market has not yet broken its structure and the upward trend remains intact. In an unbroken trend environment, corrections merely create new buying opportunities. Therefore, such pullbacks should not be a cause for panic, but rather seen as strategic entry points. Additionally, the duration and depth of the current correction also present an ideal technical profile. It is neither too deep nor too shallow, neither a prolonged sideways movement nor a sudden crash. This suggests that the market is undergoing a controlled correction, with the price consolidating in preparation for a new upward move. Especially after rallies, such balanced consolidation phases are often considered the beginning of continuation patterns. Structures such as flags, pennants, or triangles tend to emerge during these corrections and usually result in significant price movements once broken to the upside. Another important technical element supporting the current scenario is the trend lines. The price has pulled back along an ascending trend line and is still trading above it. This indicates that the trend is being preserved and no trend break has occurred. Maintaining these trend structures provides investors with crucial information about the direction of the price. If the trend line is tested and the price bounces from it, this may signal the beginning of a new upward wave. When analyzing the chart, we observe a notable development in the ATR indicator, which we frequently use to measure volatility. ATR is an extremely important and useful indicator that allows us to observe the magnitude of market fluctuations. By showing how wide the price movements are, it provides investors with critical signals about risk management and the strength of the trend. Under current market conditions, the slight upward movement of the ATR indicator offers strong signals that price action may become more dynamic and volatile in the upcoming period. An upward movement in the ATR indicator often indicates that market activity is about to increase. This suggests that the price may be exiting a long-standing period of stagnation and that larger and more decisive movements could be on the horizon. The rising ATR signals that market participants are beginning to engage with higher trading volume and that the price now has the potential to gain momentum in a specific direction. This is especially important for trend-following strategies, as ATR not only reflects volatility, but also represents the intensity of momentum. The price may currently be fluctuating within a certain range, but with the ATR indicator curling upward, a significant expectation is forming that this narrow band could be broken. Such rising ATR movements often indicate that a consolidation phase is nearing its end and that the price is preparing to begin a new trend. Whether the trend is upward or downward, increasing ATR values tell us this: the price is about to start moving within a wider range. On the current chart, while the technical signals suggest a stronger likelihood of upward momentum in price action, ATR beginning to support this direction emerges as a positive development that should be closely monitored. ATR shows us volatility. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.